Hello and welcome. It's Louise from Property Education Company. I am still here in the glorious Cebu, and the weather is a glorious 32 and stinking hot, let me tell you. But I tell you, I love being in the heat. Where are you in the world? Let me know if you can. And today we're talking about debunking some common myths that happen with loans and property buying and things that you should be aware of that are just bizarre. But anyway, let's have a chat about them because we get these comments regularly from people trying to talk to us about it. So, first up, the number one myth I love that people come and ask us is definitely I have to get a credit card to get a good credit score. Hmm. Well, do you really? Not anymore, because the banks can see instantly in your accounts, because with open banking now, they can see that you can actually get a credit score from owning a mobile phone. Maybe you're renting somewhere, maybe you have utilities connected. All of these things will give you a credit score, and you certainly do not need a credit card because a credit card can actually reduce your lending ability. So there is no need to get a credit card. I've had a client who had no credit score at all, but she had fantastic savings. Do you think any bank's going to knock her back? Oh, no, they're not. They just asked me, has this person ever had credit? No, she hadn't. I said, she's just a great saver. She'd been living at home. She was a first home buyer. Perfect, they said. We love those sort of clients. And why wouldn't they? Of course, it's a really good idea. So just save your money. Don't worry about getting a credit card because it's not essential by any means. Second, another myth is you need a perfect credit score to get a loan. Well, of course, it helps to have a better score. You get a lower interest rate and other things, but job stability and living in the same place for 3 years. So that's why lenders always ask for a 3-year history. So if you can get your 3-year history to be consistent instead, oh, I've been moving every 6 or 12 months and I've got a new job, that's what diminishes your score. What they're looking for is a good, clean 3-year solid so that you are set and reliable. Now, it's not that they won't lend to you if you have a lower score. They will lend to you if you have a lower score, depending on which lender. And yes, you may have to pay a higher interest rate, but it all depends. But don't let that put you off trying to get a loan because we help many people with a variety of scores and it just doesn't matter. We can get that something for you. Next myth that I'd love to talk about is a lower interest rate is the best thing for you. And not necessarily, because what I often find is poor service or sneaky fees can be the result of getting the cheapest interest rate. And I often find clients will come to us who have been with online lenders and go, Louise, quickly refi me out of them because I want some service. I need help doing some of the things I'm planning to do with my life, my finance and my property investing. And I can't do it if I'm doing it with an online lender who doesn't provide any support. So you need to be aware, yes, you might have to pay a bit more, but you're getting the service you need. You might be needing an offset account, redraw facilities, other things that come with a loan that you need to know about that might be worth paying for. Some banks, even major banks, are giving some loans with no fees, but are you paying more in interest? So we need to check those things out and do a comparison for you. So always ask, and that's what we do. That's what good brokers will do for you. The next myth I want to talk about, and we get this question all the time from people, oh, I'm self-employed. That makes it really hard for me to get a loan. Well, no, over 25% of the loans we do are for self-employed people. Obviously, we can help you decide, but often being self-employed can make it really easy because they're the only ones who can get a low document loan. And low doc loans can be just looking at your BAS and a self-declared income or at a letter from your accountant, and Bob's your uncle. The lenders are much more keen to lend to you on that. Whereas also we can lend on if you're paying yourself a wage in your self-employed income. Some lenders will just accept that. Depends on the circumstances. So in your trust or company, all those things need to be considered. So always ask us. We will do the assessment for you, but we happily lend to self-employed people all the time. And we have many, many solutions that which we can offer you, and we will help you fit you to the best lender. But don't hesitate to ask. Get someone to explain it to you. It's not because you're self-employed. It's because of the way your finances might be presented. And we can maybe present them a different way to another lender that will help you borrow more. Now, that happened recently. A client was only offered one choice of lender. They had their existing loans there and they wanted another bigger loan. They were refused. We took them to another lender and were able to borrow hundreds of thousands extra. So it all depends. And we could get their existing loans on interest only, which some other lender wasn't prepared to do. So how you are presented to a lender can make a big difference when you're self-employed. So just ask us. And that's a really good thing to not worry about. Just put it out there and come across and say, help me sort it. Another myth we have is that I can't pay my loan off quickly at the end, or I can't pay it off because there'll be penalties. Well, years ago, there were large exit fees, but it's very rare now that loans have exit fees. Now, it's not to say they're exclusive, but most banks and most major lenders do not have exit fees. There are a discharge fee, which might be a couple of $100s, and the mortgage release fee, but there is no penalty as such for paying off a loan usually early, unless it's a fixed loan. Now, fixed loans, the banks want to see their interest. Now, if interest rates have gone up and you're in a lower rate loan and you want to pay it off, well, of course, the bank's going to be thrilled to say goodbye to that loan for you. But if rates have gone down and you're in a higher fixed rate, you will have a penalty to pay. But there's not many people in fixed rate loans at the moment due to the way the market's been going. So you can usually pay off loans, but just depends on your circumstances. So always ask and get an assessment first. The next myth I have is refinancing is always good for you whether rates go up or down. But is it? So sometimes it's not the best option. And we often start by sending a discharge form to your current lender or asking them to try and keep you as a client by reducing your rates. And it's much cheaper than going to all the trouble of trying to refinance. But sometimes it is worthwhile, and we will do that assessment and tell you. So that's a myth, but maybe you need to just get the assessment done. And finally, renting is throwing good money after bad. I often find people saying that renting might be the stupidest thing to do when really you should be buying a house. Well, sometimes I've had a young client very recently. He wanted to buy his first property. He was desperate to get into the property market, but it turned out it was better for him to buy an investment property than buy his own home. And so he's bought a fabulous investment, but he's still living where he was prior. And that's worked out ideally for him. And he's still got the option to be a first-time buyer when the time comes, depending on the state you purchase in. So let's have an assessment. Renting may be a good option for you because you get to live where you want to be and rent. And at the moment, I'm thinking renting in Cebu looks an awesome way to go because it's so beautiful and warm here. And I'm going back to Melbourne soon and it's freezing. Anyway, thanks for watching and I hope you have a wonderful week. We'll be back next week. And if you've got any questions on loans at all, don't hesitate to ask us. Thank you. Have a wonderful week. Bye all.